Gold just closed above $4,000 an ounce. For the first time in human history, this time it's not just a metal, it's a mirror. Every dollar printed, every war declared, every empire trembling, gold whispers the truth, power shifts, fear erupts, and those who think like rulers survive. In 2025, gold soared past $4,300 per ounce. Central banks piled into reserves, and forecasters now whisper $5,000 is possible. But beneath the rally lies an ancient psychology. The same impulses that made kings worship it, priests deify it, and humans gamble their lives for it. In this episode of Wealth Psychology, we peel back the layers. We'll trace gold's divine roots, follow how rulers weaponized it, and see why today's surge is less about price and more about power, panic, and the human mind. Stay with me. This isn't just a market story. It's a psycho-historical tale that maps the boundary between those who build lasting wealth and those who chase illusions. What's happening now as gold makes headlines in recent surge and news? 1. Gold has smashed records in 2025, rising over 60% year to date. 2. Gold's beaten its weekly gains, biggest weekly jump since 2008. 3. HSBC now projects a $5,000 per ounce gold price in 2026. 4. Reuters reports that gold climbed past $4,300 as investors rushed for safe haven amid political, economic, and rate cut expectations. What are the key drivers today? 1. Safe haven demand and global uncertainty. U.S.-China tensions, potential credit stress, weak dollar. 2. Rate cuts and monetary policy. Markets bet on imminent Fed cuts, reducing opportunity costs for non-yield assets like gold. 3. Institutional/central bank demand. Central banks increasing gold to diversify reserves. India's gold reserve jumped above $100 billion. 4. ETF inflows. Institutional allocations rising. 5. Weakening dollar, inflation, debt stress, dollar pressures fueling gold's appeal. Global debt burdens and inflation fears push investors to real assets. Market capitalization of gold surged by $300 billion overnight when prices hit $4,250. This isn't mere speculation. It's a reenactment of humanity's eternal dance with gold. The same impulses that pinned the brilliance of ancient civilizations are alive again in our digital age. We cannot talk about the present surge without talking about the long obsession with gold. I mean the origins of gold and why ancient humans worshipped gold. First extraction and fascination. How humans first found gold, river panning, fire separation. No practical use at first. Its glow, permanence, non-corrosiveness made it mystical. Symbol of sun, immortality, divinity in many religions. Gold in religion and kingship. Priests, pharaohs, emperors used gold to signal divine right. Temples lined with gold, gold masks for gods and kings. In many ancient texts, gold equated to incorruptibility. Gold as power and state tool. Assyrian, Persian, Roman empires minted coins in gold to project power. Gold reserves became a measure of state legitimacy. Wars to capture gold-rich territories. Spanish conquest of Americas, African kingdoms. Breaking point and monetary revolutions, gold standard adoption and collapse. Bretton Woods, Nixon's closing gold window, detaching gold from currency, hyperinflation episodes, Weimar Zimbabwe, reawakened gold as refuge. The gold obsession video background ties. As the 20th century unfolded, gold wasn't just money, it became muscle, a weapon in a silent war between nations, trust, and time. During the interwar years, between the fall of empires and the rise of new ones, gold moved more than armies. In the 1930s, as economies collapsed under the Great Depression, countries hoarded their reserves like oxygen. The United States, through its 1934 Gold Reserve Act, confiscated private gold holdings and concentrated wealth within the Treasury. Britain struggled to defend the pound. France, the Netherlands, and Switzerland guarded their gold to anchor their currencies. Then came the world wars. Gold was the ballast that kept nations afloat amid chaos. Hitler's armies looted Europe's vaults. The Allies built Fort Knox into a fortress of faith. Whoever held the gold held the leverage. When the guns fell silent, the Cold War began, and with it, a new kind of gold war. Behind the Iron Curtain, the Soviet Union used gold to stabilize its ruble and buy influence abroad. In the West, the United States anchored the world through Bretton Woods, promising that every dollar could be redeemed for gold. Gold became a symbol of credibility, a political lie wrapped in financial faith. But by the 1970s, that credibility collapsed. Inflation soared, the Vietnam War drained budgets, and foreign governments began demanding gold instead of paper. When Nixon closed the gold window in 1971, it marked the end of restraint and the beginning of a new era of psychological money. By 1980, gold exploded from $35 to over $800 an ounce, a 2,000% increase in less than a decade. History had repeated its warning. When governments lose discipline, people seek gold. And so began the modern pendulum. Between price suppression and market freedom, the U.S. Treasury sold gold to cap inflation. Central banks alternated between dumping and hoarding. Every intervention, every manipulation only deepened the myth that gold always wins in the end. Then came 2008, the great unmasking. When the global financial system cracked under its own debt, gold became the lifeboat. In the years that followed, gold quietly proved its purpose. It didn't yield interest, but it yielded trust. While banks collapsed and currencies faltered, gold held its ground. And once again, the world remembered its ancient lesson. But something curious happened. After 2012, interest faded. Gold prices drifted sideways. Investors turned to a new digital promise, Bitcoin. The crypto crowd called it digital gold, a rebellion against the old world. But psychology has memory. When Bitcoin crashed, gold didn't. When governments banned crypto, gold stayed legal. When markets panicked, gold remained tangible. Gold had something Bitcoin never could, a psychological moat built over 5,000 years. By 2022, central banks began to take notice. Quietly, they reversed decades of disinterest, buying over 1,000 tons of gold in a single year. China, Russia, Turkey, and India led the surge, not as traders, but as survivors preparing for a storm. By 2024, something subtle yet seismic was underway. Gold accumulation was no longer speculation. It was strategy, a silent preparation for what would come next. October 15, 2025, gold crossed $4,300 an ounce. For 13 days straight, it broke records, 10 new highs in less than 2 weeks. A frenzy powered by fear, speculation, and belief. Inflows were staggering. Investors poured billions into ETFs and bullion vaults. Within days, gold's market capitalization jumped by nearly $300 billion, more than the entire GDP of Finland added overnight. Major banks raced to revise their forecasts. HSBC, Bank of America, Goldman Sachs, all calling for $5,000 an ounce. Bart Mellick of TD Securities said $4,400 by mid-year was not just possible, it was likely. Meanwhile, retail investors flooded TikTok and YouTube with videos shouting, "Gold is the new Bitcoin." The mania had begun. But what drove it? Everything. Government shutdown fears, debt crises, central banks printing and easing even as inflation rose above 2%. It wasn't just a rally, it was a reckoning. And yet, as Bart Mellick warned, gold also looked effervescent. The RSI was over 90. Prices were 25% above their 200-day average, a market that looked unstoppable and therefore was vulnerable. Every surge tests faith, every mania tests patience. By early 2026, the first correction arrived. Profit-taking, algorithmic selling, technical pullbacks to $3,700. But it wasn't a collapse, just a breath. Gold, as Melick predicted, was consolidating, not collapsing. Still, beneath the calm, a new fatigue set in. As gold became overbought, capital began rotating into silver, platinum, even uranium. Diversification masked quiet doubt, and then came the constraints. Mining costs soared. Environmental regulations tightened. Supply lagged behind demand. The physical world couldn't keep up with psychological hunger. A few macro shocks could still change everything. A dollar rally, rate hikes, or a government settlement that calms the markets. Ironically, as Melick joked, peace itself could crash gold. But the greatest risk wasn't technical. It was emotional. When euphoria takes over, discipline dies. The 1970s taught it. The 1980s proved it. And 2025 might remind us again. Every gold rush ends when greed replaces fear. And yet, in the shadows, the ancient inequality remains. As gold soars, it's not the middle class that hoards it, it's the elites. Central banks, billionaires, and corporations buy physical bars, while the masses chase ETFs and memes. So, what can we learn from this cycle? That gold rallies not when currencies fall, but when faith collapses. Because money, at its core, is not metal or paper. It's story. The same archetypes that once worshipped gold idols now scroll through price apps. Divinity, immortality, and status, they never disappeared. They just moved to digital screens. Fear flows into gold. Hurting magnifies it. FOMO fuels it. Confirmation bias locks it in. The rich know this pattern. They don't run with it. They wait because wealth psychology is counter-cyclical. The rich don't chase safety. They buy fear when others panic. They use gold as a tool, not a trophy. They diversify. They calculate opportunity costs. And above all, they think long-term. So as gold glitters above $4,000, remember, it isn't a sign of strength. It's a signal that faith in paper is fading. But whether that fear destroys or enriches you depends on one thing: your mindset. Gold did not rise because it's dramatic. It rises because we are. It's a mirror, a reflection of human cognition, trust, and fear. When we lose faith in systems, we reach for symbols. Gold becomes that symbol, the tangible thing we can hold when everything else feels fake. Every surge in gold's price throughout history hasn't been a market story. It's been a psychological confession. It reveals our collective fear of collapse, our hunger for permanence, our mistrust of promises written on paper. But like every human pattern, this one has cognitive traps. We fall into projection bias, believing that today's battle will last forever. We cling to anchoring, comparing gold only to its past highs, forgetting that context changes everything. We surrender to symbology override, treating gold like a talisman, not a tool. And we're blinded by survivorship bias, seeing the few who got rich early and ignoring the many who got stuck holding too much. There's a difference between using gold and worshiping it. Healthy wealth builders use gold as part of a diversified strategy, a safety valve in a volatile world. But the toxic mindset turns gold into identity. They hoard it, they brag about it, they build shrines to it. They forget that the goal isn't gold, it's freedom. To master gold, we need a mental shift, from fear-based accumulation to strategic reserve building, from gold as the end game to gold as a guardrail. Because wealth isn't built by clinging to what feels safe. It's built by understanding what keeps you balanced. So, what separates those who use gold from those who get used by it? Here are 5 wealth principles drawn from history, psychology, and experience, the quiet laws that the wealthy live by, especially in times like this. The rich understand this. Gold is insurance, not identity. They allocate 5 to 10% of their portfolios, enough to balance, never enough to blind. The poor or fearful, however, often fall into obsession. 50%, even 100% of their wealth locked in metal. The result? Illiquidity disguised as safety. Every surge feels like victory, until it isn't. Gold's nature is volatility. That's where its strength comes from. The wealthy don't panic at every dip. They see opportunity in chaos. The poor react emotionally, buying high, selling low. Always set re-entry rules. Define stop-loss discipline. Don't let your nervous system trade your net worth. Gold is not meant to replace other assets. It complements them. It's the counterweight to risk. Those expecting gold to outperform everything forever miss the point. It shines brightest when faith is darkest. Always use gold to hedge drawdowns, not to replace growth. Pair it with equities, bonds, and tangible assets. Balance creates resilience. The story around gold often drives the price more than the fundamentals. Every era builds its myth. The divine metal, the safe haven, the freedom hedge. The poor chase the story. The wealthy study it always. Develop your own narrative. Understand why you buy, not just what you buy. Finally, the wealthy never trap themselves. Gold is a cage only if you let it be. They know when to exit, when to reallocate, when to let the metal rest. Because optionality, not obsession, is the true mark of freedom. Actionable shift. Always keep cash, keep flexibility. Gold preserves your options, not your identity. Gold is no longer just a relic of the past. In 2025, it didn't surge because of hype. It surged because the world's foundations trembled again. When trust in money erodes, gold becomes a mirror, reflecting fear, faith, and human psychology. But here's what separates those who prosper from those who get lost in obsession. They use gold as a tool, not a trophy. They ride volatility with discipline, not emotion. They treat gold as a complement, not a replacement. They see the story beneath the price and refuse to be driven by it. They guard liquidity, protect optionality, and never let gold become a cage. The ancient obsession lives on, but today we decide whether we're enslaved by it or mastering it. If this changed how you see gold, power, and wealth, don't miss our next video. Difference between money mindset and wealth mindset. Until then, think deeply, invest wisely, and remember, wealth isn't what you collect. It's how you act under stress.